Ladies and gentlemen, welcome to the Fintech Frenzy. Today, not late, we are going to be talking about SOFI. I must have did that at 8:30 and 59 seconds left. That was very lucky. All right. Today, we have amazing news about SOFI potentially getting a government client deal. I'm going to be breaking down what all this means. To the best that we know. So there's a lot of unknowns, like every Galileo deal. And we're also going to be going through some other news that we ended up seeing today, which was also quite exciting. A lot of new higher highs, 52-week highs on SOFI. I want to talk about some new potential marketplace deals that they have for Black Friday. Excuse me. I want to talk about crypto. And then, what are you trying to get out? One second. I'm going to let the dog out and then we'll continue. Go on. All right. Sweet. All right. So, welcome. I am the SOFI guy. Let's do this. By the way, Gary Gensler's stepping down January 20th. Crazy. And we'll also talk about price targets today as well. But let's jump into the big news. So, we ended up seeing this, according to Yahoo Finance. BNY is going to manage U.S. Department of Treasury's largest prepaid debit card program for federal benefits. Okay? Which is Direct Express. If we end up going down near the bottom here, it says MasterCard will serve as the program's payment network, a role that it's played in Direct Express's inception in 2008. Additional providers include Galileo Financial Services, MoCaFi, Accenture, and Sunrise Banks. So one of the things that I actually heard from a user on X that I talk to quite frequently, I know that he's a viewer of the channel, which is Jonathan Bird. I don't know if any of you guys follow him. I don't know what he does for a full-time job, but he actually has a very good understanding of the fintech landscape. And I'll show you guys what he thinks is going on here, because it's very hard. They talk about all these different Marriott, a big collection of these providers, and it's hard to know what all that they do independently. So I think Jonathan has the best understanding here, and I'm going to go off this being probably the most accurate assumption. So still learning more, but here's my guess. BNY is going to manage the overall program, okay? MasterCard provides the actual payment network. Galileo is going to supply the payment processing technology. MoCaFi offers digital banking services, maybe a website and app. Accenture is going to handle front-end office customer service operations. Sunrise is going to act as the card issuer. And Ubiquity is going to provide back-office support services. So, yeah. An additional 3.4 million users to the SOFI technology platform business, where SOFI is going to be making a percentage of the overall payments that end up flowing through it. Is 3.4 million a massive win? It's not groundbreaking. This is no Citibank deal. This is no US bank deal or Wells Fargo or something along these lines, like what Stephen Fiorillo has alluded to the other day. But this is still a pretty large chunk win for SOFI if you're accounting this in Q4, or whether it comes on actually in Q1, which is whenever they say the program's actually going to start, which is a January 5th move, I think. I need to read the top again. I'm pretty sure January 3rd of 2025. So if this 5-year agreement is going to add those users on for Q1 or Q4 is, to be determined, but I'll assume it's between those two. And then obviously more users on the platform equal more consistent payments, which equal more fee-based revenue, which hopefully can attribute to SOFI's hybrid multiple, which means price goes up. Speaking of price going up, let's take a look at SOFI, because this is quite exciting. Bear with me. All right. SOFI had hit a price of $15.55 today and ended up crashing down just at the last part of the day to $15.01, still holding above that $15 mark. And in after hours, actually ended up getting even plus 1%. Hopefully some of this momentum holds through, but 15.55 was an unbelievable price to see. And we're seeing a good multiple for SoFi, which for the longest time we were not getting. So I feel vindicated. You know, the people who sort of spoke poorly about SoFi over the last little bit, like Ram, like, Chiavrini, like, Baloney, like even, Strongman and all those other group of, fake exposer people that say that I was, promoting garbage or whatever. Big FUs to those guys, specifically those guys, not the Wall Street analysts, but the people that wanted to try to pick me down just whenever the stock was down, as if that was, a scam or whatever. But the stock's now up. And from the time that even they had a problem that I did a case study as a course and sold that as a separate product, well, you'd be up like, I don't know, 100 and nearly 50%, something like that, 140% since that course had dropped. So David Chiavrini said, your mama. So yeah, I'm telling Strongman, I'm sure he's not going to say much back. What does he have to stand on? Tanner, when Lambo? I mean, depending on how much you put in, you probably already have Lambo. I actually just spoke with Josh earlier on Twitter. He has about, like, I think nearly $4 million, a little over $4 million in SoFi. TJ's probably another one. So they are well past the Lambo days. Well past. No, I got to give it to him. I mean, Strongman's a strong man. I'm not trying to bash his gym stuff. I just think that his opinion of SoFi, I don't think he actually cared. I think that he was looking for content. And it's not just him. I'm not going to just pick on him. I actually had a conversation with him after, and he seemed he said nice things to me in private, and then poor things in public, which is probably not a good sign. But Gary Gordon interview would be interesting. So he said, I spoke to him recently. He said that he'd be happy to talk. But the things that he wants to talk about is not about profitability. It's not about the things. He just wants to have questions about their actual accounting, which is not something that I want to do. I mean, some of these real banking guys will, like, if they just want to focus on the areas that, seem suspicious to them or something like this, like, obviously they can have that point and it will seem like a bigger point if you're that type of hammer, then that is the nail, then that seems like the biggest deal in the world. Even though they don't want to talk about member growth or product growth or cross-sell or revenue growth or any of these things that is showing that the business is actually growing, or the fact that they continue, like, one of the things that I think is so funny is they talk up how good these loans potentially actually are, and then SoFi continues to sell more loans every single quarter. So, are they bad loans? Because they're certainly selling them to institutions. I mean, they're securitizing them with BlackRock. You don't think BlackRock's looked through the how good the loans actually are? Tim's interview. Yeah, but I did one recently with Tim. I did one with Tim after Q3. Strongman went over SoFi's latest quarter and he was positive towards it. Good for him. Let's get Lincoln on camera. He's not in the room. Also, what is the AI product Noto recently mentioned for Plus members? I think maybe what you're talking about is Cash Coach. That's probably the closest product. What this is going to do is essentially just look at the overall accounts that you have with SoFi, your loans that you have, your credit cards, and they're also going to look externally, right? Because SoFi Relay pairs up with Plaid, so they can actually see your information outside of just SoFi. So it's going to take in all that information. It's hard for me to know how much of this is actual AI and how much of this is just, a calculation. If there's more interest to be made over here than paying off these small coupon rate debts, then keep your cash over here. But if you have credit card debt over here, it's probably best that you stop trying to save up in these savings accounts amongst past a certain emergency fund and actually go over there and start to spend down your credit cards. So the word AI is being used loosely, and more loosely the further we get into this cycle. But I honestly don't think it's a lot of actual artificial intelligence needed there. Regardless, I think that it'll be a good product for people to get their money right. And it's actually not in SoFi's best interest to do so. They want to have revolving debt for credit cards. So to tell users to go pay off their credit cards because it'll be better for them and their FICO scores, I think is a very, very honorable move for them to do, and will probably win back customers over the long period. One of the things that SoFi's been doing lately, I've seen this, I think, 3 times in the last couple months, is emailing members and saying, hey, actually, we noticed that there's been a problem in your credit card a year and a half ago, and we actually want to give you back that money because you were, not rightfully charged, or there was a little bit of interest that you probably should not have been charged from a year and a half ago. So here is $200 in credits for you, so then you can, hopefully forgive us for that problem. This has happened constantly, right? Of people getting cash back that they were not being allocated to properly, or credit that they forgot about or forgot to pay off, or potentially was SoFi that had a problem on their end. And they've been going back and rectifying that. Well, it's a small price to pay for SoFi to rectify that, but you're winning a member for life after that. If they can really say, hey, there was an issue 18 months ago, but don't worry, we solved it. Wow, that's above and beyond. And you can go on X and sort of scour through the SoFi stuff to find a bunch of those examples. Let's see here. We should bring on Steve once a month. I would have Steve on every single week if he wanted to do the SoFi Weekly, but he got extremely busy. People thought that he didn't want to talk to us. No, he got a promotion at work. So his just amount of work that he had, and also the reputation that he had to uphold, was a little bit past talking to goofy little internet nerds like us to talk about SoFi. So he's just being a little bit more precautious, but I think starting to step back into his old life as he finds some grounding where he is in his work. Okay, so let's talk more about this Galileo deal, because I can see that some people are wanting some more information on this. What I think is interesting is not the 3.4 million users. I mean, that is fun. The program will grow over time. What I love about Galileo is every single partner that they work with are also trying to grow in themselves. So you're creating a platform business similarly to Shopify or something like this, where you're enabling success of another company, and then your win is based off their win. So there's sort of this compounding growth effect. What I like about this is that if you start getting into these government programs and it's working, well, then that's going to be the similar setup that can happen across the board for other potential debit programs that happen within these government programs. So this is the largest for the Department of Treasury, but there will still be millions and millions of other users that could potentially end up going downstream. And plus, it looks good on their resume too. Working with governments, potentially you're going to end up working with governments in LATAM. Similar programs are not just in the United States, but in Canada, in Mexico, in Argentina, in Chile, in Peru. So Brazil, which Galileo can help with all over the Americas. So it's good for the resume. It's a good starting point, and hopefully they continue to add more of these contracts. Okay. I'm not saying Noto doesn't believe in this company, but why isn't he buying at these levels if the stock just keeps going up from here? I think what Noto has done for the stock, you have to think about it, right? He's not made of money. Okay. So he's getting more stock in terms of his actual restricted stock units and stock-based compensation. Then before, as the stock was down, he was taking additional capital to go out and buy more shares of stock. And then people look at his overall net worth and say, you know what, he's worth this much money, $100+ million, but it's all tied up in Twitter stock, SoFi stock, and potentially other investments. So you're wanting him to sell those and then go into more SoFi. It's like, well, you're not going to sell SoFi to buy SoFi. He makes $1.4 million a year as his stock-based, or sorry, actual salary through SoFi. He's going to get taxed more than half of that being out of California. And then you want the remaining amount to go to SoFi on top of what he gets of stock-based compensation. I think he's done enough. You look at other CEOs of even exploding, unbelievable companies. Okay, look at Jensen Huang, look at Alex Karp, look at Tobias Lutke, right? All of these companies doing phenomenally. Their CEOs are selling stock, and the stocks continue to rise. So let's not get ahead of ourselves. He bought a lot in the 4, 5, 6, 7, 8, and 9s. Let him rest. This is fine. He hasn't even sold a share. I'd be fine if he was selling shares in even Robinhood, right? No one has a problem with Vlad Tenev selling shares of Robinhood. He sells consistently. He sells 250, I think, 250,000 shares of Robinhood like a month or per quarter, something like this. But because it's part of a stock selling plan, right, predetermined, people think that that's okay. They go, oh, okay, well, that's fine, because he's not just saying that it's overvalued. He just wants out of his own company. Now, I genuinely do not have a problem with Vlad Tenev selling shares, especially at the rate that he's doing it at. But it just goes to show you, like, whenever Anthony Noto doesn't sell any shares, that's even still a problem. Why isn't he buying at 15? Why isn't there signs that he thinks it's undervalued? Does Wall Street buying not make it enough for you guys? No, it was not. It's perfectly public. Yeah, it's time for him to sell. Think SoFi might have a dip before the end of the year? It's possible. It's perfectly possible. I think that what people are excited for, like I was talking with Steve the other day. I might have to go blow my nose here. I feel like I have a runny nose. But what Steve was telling me earlier is, I was talking to him about Palantir and it being overvalued, and I was like, man, why aren't you, potentially selling this or trading this or whatever? And he goes, well, I think it's going to go higher. I said, why do you think that? And he said, well, if Trump's getting into office, he's going to be cutting taxes, not only corporate tax, but also potentially taxes that Steve has to, potentially endure, like capital gains. And if he's going to cut, why aren't I going to hold and just wait for those taxes to end up getting cut so then I can save more on my sale? And not only is Steve doing that, but the entire market might be doing that. So if the entire market is if the entire market is doing that, well, that's very exciting, because it could be a very long time before people end up making any sort of, changes to their investment strategy other than buying. So I'm very of the mindset that as long as macro keeps up, we're going to have a ton of loan selling from SoFi, loan buying from institutions, and the range between credit cards and personal loans offered from SoFi is the widest margin that it's ever seen in history. I just had a conversation recently where they said 2025 is going to be the year of the tech platform. And I can believe that, right? The tech platform is going to do well. What it's really the year of, though, in my opinion, is the year of lending. lending before, back in the day, like, I mean, 2020, 2021, before we were even a bank, like, they would sell and recycle their loan book multiple times, or could do it multiple times in a single year. Okay. We don't go anywhere near that. We sell fractions of our total loan book. But what if we got back to selling large percentages, like non-interest income on the lending platform skyrocketed? And then Wall Street can look at this and say, you know what? This is fee-based revenue. Like back in 2020, whenever SoFi made fee-based revenue, or let's just say non-interest income, from like in the ranges of 70+%. Today, it's around 36%. So you can see where that the income shifts have changed. I can bring up a spreadsheet for this. Let's go. We're going in. We're diving into the spreadsheets. Which, by the way, ladies and gentlemen, if you guys aren't on the Discord, you got to get on the Discord, okay? Down in the description down below is the beautiful Discord for SoFi's thing here. Wait, I'll share it here, where we cover all the information that we talk about on here, but even earlier, right? So we go through all different stuff on SoFi, on crypto, different news articles, people just talking about their overall portfolios and stuff. It's great. You know, you got Hood, Nubank, Fintech stuff, different tech stocks, talking about NVIDIA, talking about Tesla, all sorts of stuff. So we're currently at 456 members. I'm trying to get to 500 before the end of the week here. So please get on Discord. It's an amazing conversation. And if you're a course member, a lot of the course members have not gotten on Discord yet. Okay. Make sure you get on Discord. You're going to see a lot of benefits, like portfolio updates from me. I'm going to be doing stock alerts and also live streams, but it's going to be on Discord. Okay. It's the only way that I can manage who has the course and who doesn't is through Discord. So we're going to be doing the actual live streams there, stock alerts there. You can see my portfolio and changes on a bi-weekly basis. All right. Now let's talk about SoFi here. Okay. Boom. Here, is this big enough? So total non-interest income, and then you can see total non-interest income as a percentage of the total. If you go back, let's see where the highest one was. Is it Q2 of 2021? You're at nearly 75%. Even today, even though in Q2 of 2024 is at 31.5%, this quarter, it's ramped up dramatically, 36%. It's still nowhere near 75% whenever we were in a good macro. Okay? So this is very exciting if SoFi can continue to grow this portion of their business, and that is from lending, from still 53% of their overall revenue. Financial services is pushing its weight, and technology platforms still growing, but losing share of overall SoFi revenue. But lending still makes up for more than half of the overall revenue. If we have a year of good lending, like that's where people really think that SoFi might multiply the most. I mean, you're really talking about real gains in fundamentals, which will lead to stock price. And especially if it's less interest income and more non-interest income, you might even see a multiple expansion there. Let alone all the deals that Galileo can close out, let alone all the cross-sell to checkings, credit cards, all those other products that they want to expand on that are financial services that might be way more fee-based revenue than currently what we're at. I mean, really, what you're seeing from SoFi is exactly what we've been hoping for the longest time, that we've been pounding the table on and saying, well, it wasn't as good as what we thought it was, but these things have SoFi still expanded in these areas. Well, okay, there's a lot of people joining the Discord. I just got an unusual join activity detected. I'll just say that's normal. Okay, there we go. Okay, you guys can join in again. Make sure that you verify. Oh, and also careful about people reaching out to you. There is potentially bots and stuff. I'm not going to DM you unless I tell you beforehand in the chat that like you'll see anyway. But I'm not reaching out to you to sell you anything in DMs or anything like that. It's most likely scammers. Okay. Good work with your DD on stocks. Thank you. Thank you. Yeah, to any of the new people that that follow SoFi that want any help, I mean, hopefully we can bring enough due diligence here for you. I'll just show you what we sort of track for SoFi specifically. Show you over the year or so, and it's changed a little bit since I've shown you guys. So, not only do we cover members and products, I've actually just recently added in because this has been something that they've started to do where they're showing off total members, but also churning members as well. So you can see that here. That's all brand new. Similarly with products as well. So then we can track not only what they are saying that we're getting, but also net what we're getting. They said we added 1 million products. What we really added was 874,000. And they subtracted about 193.7 thousand because either they were inactive or it was no longer a product that they served. Okay. But if we go down, I've got information on every segment that they're in, every product that they're in, all the revenues, adjusted, segment profitability, adjusted EBITDA, net income, all their expenses, non-interest expenses, all the breakdowns for all their loan platforms, credit card information, lending, portfolios, all their disaggregated, revenue, and then a bunch of statistics that I like to add in to sort of understand where the loan platforms are, all their debts, all the problems, all the capital ratios and everything. We track it all. And that's literally, if you look at the bottom page, you'll see that's one page out of like 12 that we have here. Not only do we have that, but we also have, Galileo's entire client list and competitors, guidance beats, forecasting for future quarters, deposits, bank ratings, website traffic, their valuation to get top 10 financial institution valuation, their different diversification, what the CEO has, analyst revisions, all these different statistics. We're covering it all. It's way too much. So if you guys want help with SoFi, I'm the SoFi guy. Would you believe it's like my 6th largest position? Why is SoFi going up as you speak? Because it's incredibly small amount of volume on 24/7 trading or 24/5 trading. So I wouldn't look too much into it. Tanner, serious question. Do you think that we hit $15 today because Tevis willed it with his selling covered calls? I mean, seriously, no, but I'm not superstitious. I'm a little stitious, but no. I don't even have 6 positions. I think I'm at 16 right now. And then if you include funds, I'm at like 19. And then if you include crypto, I'm at 22. Yeah. And that's pretty good for me. I've really lowered that countdown a lot. T Hutch still holding just 1 position. Can I guess it? Tanner, my SoFi holdings today reached $100,000. Ladies and gentlemen, we broke through the 6-figure mark. Congratulations, David. That's awesome. That is awesome, my friend. Tevis made 10% on HIMS today. No, he's doing actually really well. We pick a lot of fun at Tevis, but I mean, he bought into Lemonade, it's skyrocketed. He bought into HIMS, it's skyrocketed. He's doing well on Tesla. He's got a lot of Bitcoin. He's doing well for himself. I like to pick fun. Captain Crunch is saying, should I sell Palantir for SoFi? I don't know what you're on, brother. And for the people that say, hey, Tanner, you don't seem very bullish on Palantir. Why are you saying that? Captain Crunch has been the biggest SoFi bear that's been here. I think you need to buy whatever you want to buy for your portfolio. Mine reached 300,000 today. Awesome, man. That's awesome. That's awesome. Everyone's at different starting points, different, as long as we're investing, growing our net worths, and have some sort of strategy to beat the S&P 500. That's all we're doing here. That's all we're trying to do. And if you're not consistently beating the S&P 500, then you know what the truth is that you should not be investing in individual equities and like just literally buy the S&P 500. Stop trying to gamble on individual names and just legitimately buy the index, and then learn how to get good at something that is bringing you in income. And then not only like even just some side hustle, because honestly, learning about investing is a lot of time. You could be spending that time doing something else. And even to me, I find that sometimes the time isn't worth it whenever you're just, like just beating the index on a certain year or under it for some of these positions for sure. Like SoFi's been that way for a long period of time. And at some point for me, it's like, oh, well, you know what? There a little bit of it is the game part. Like I've just been in it too long where it's like, you know what? It's worth it because I like it a lot, but that's sometimes the wrong way to think about it. But then there's also YouTube, right? Like to me, this is a little bit of a side gig. It definitely does make money. SoFi is now my biggest position. SoFi is definitely past Nubank in terms of my holdings. So that's been a lot of fun. Nubank has fallen a little bit and SoFi has not stopped. So it's been the little bit of a flippening here. There were never any hints of a SpaceX IPO through SoFi. What you're thinking of is the tender offering of SpaceX, which was a comment that SoFi had put under their comment. No extra additional details, but I think a lot of people really thought that this was an IPO because they saw that the price action and stuff like this. That's not what's happening. It's actually quite the opposite. So it can go two ways. One, they're actually buying shares away from their employees to buy back private equity for the business. That's considered a tender offering. Or they're actually selling shares more for their employees. So giving more to their staff, and then they can end up purchasing those shares. But that would still be a private deal. That's not open to individual investors, like an initial public offering would be. Do you think that we'll see under 10 again? Anything can happen, friend. We definitely could. Ollie said, I joined Discord because of you. Love to hear it. Love to hear it. You'll have a good time. Just be careful about the bots and stuff. That is, like, if I'm DMing you, yeah, it's probably not me. Most likely not me. Have I DM'd people before? Yes. Has it been like, it's, if I don't know you, it's probably not you. Okay. If it's Nala, if it's B-dubs, if it's the people that I see in chat consistently, I have DM'd them before. But on even that is like giving it a little bit of space. So then you guys think that I'm not going to DM you. What is your opinion on a possible short squeeze? I think we're going through it. This is a potential short squeeze. The stock price has gone from 7 to 15. What would I call it? The short interest has gone down. That's a short squeeze. Tanner, I've had probably 100 bots pretending to be you on X, trying to follow me. And literally there's nothing I can do. The only thing that you guys have to realize, and it's even worse on Discord, but on X, I'm verified. I'll continue to pay $8 a month. The bots can't pay $8 a month to look like me. So there's only one verified future investing on X. So that's easy. With Discord, there's really no way of knowing other than if you're in the server. If you're in the server, there's only going to be one of me because it's my server, and anyone that joins looking like me is not going to be there for very long. And plus, I've got tags. My name is red. Like you'll know which one's me. And then if you need to send me a message, you can click on my name through the server. Make sure that it's the one that is through the server, and then you can message me. If anyone messages you on Discord, just open up DMs with me. And if there's no messages there, then it's not the bot that's trying to get you to send them your Bitcoin address or whatever. I'm not going to ask you guys for money. Not like that, at least. I do sell a course. That's funny. All right. People who fall for bot scams deserve it. I don't think that's true. I don't think that's true at all. A lot of these people, like I said, they're trying out Discord for the first time. It's not that they... What's the monthly cost to join the server? It's free. It's absolutely free. There's no cost. It's just to talk about SoFi and have a little bit of community after the live streams. So one of the things that I felt pretty bad with is like some people I even saw just earlier in these conversations, people were talking about some non-investing thing. Like they weren't even talking with me. They were talking to other people in the chat. But then whenever I want to go, I'm ending their conversation. Just doesn't seem right at all. And then YouTube doesn't really have any way for people to continue to have those conversations. There's no DMs. There's no community group, thing other than comments. But even then, it's like on a per video basis. So to find that person that you enjoyed talking to or something in the next video is just not going to happen. It's terrible. So I just needed a place to allow people to continue their conversations, people that I can share information with and due diligence with. And also, I'm going to get a lot of my due diligence off of you guys. There's people in this chat that know more about options than I will. Well, I don't want to say that I'll ever know, but that are teaching me a lot because I definitely don't follow options as closely as I probably should. Tanner DM me a picture of his tits for $20. Matt, if you give me $20, I'll send you a picture of my tits. I'll do that. You'll get a shirtless pic of me for $20. I'm cheap. That's funny. Yeah, that too. Discord, you'll actually see if there's a mutual server that they have. So, yeah. 482 members in the thing. Oh, well, 476. Yeah, there is 6 bots that but bots that I put in there to like let you guys know, like to let if anyway, I don't have to explain it. They're not bad bots. They're bots that help moderate the server. I think there's some shirtless pics of me on Twitter already. If you guys want to search for them, they're free. But is that illegal? Is that against YouTube's terms of service? I was joking. What's my worst performing investments, previous or current? So previous is probably skills. In terms of a dollar base, I don't know. But as a percentage base, it would be skills. And then currently would be Unity. And I did not did not want any part in that. I got it purchased for me, and now it sits in my account as like a negative 50% for the year, and I'm not allowed to sell it till January 1st. In which, by the way, I'll be taking a loss on that. Yeah. I only have like $100, or I did have $100. It's probably like $50 now. I'll check. I'm sorry. I had a short playing whenever I opened. I'll check. But yeah, right now there's not a whole lot in the red because the market's just absolutely ripping. And everything I hold is in tech or growth in general, but mainly everything is tech based, and that's doing very well. So there's not a whole lot of red right now. But talk to me in 2022, it was a bloodbath. I'm down 44.4% on Unity, which is negative $53. Thank God I got off pretty scot-free there. Unity was the worst buy ever. I don't know what Tevis was thinking. Even whenever he brought it to me before all the problems that Unity had, with so they really had a change in pricing, and then everyone just left. They were like, all right, well, I guess we don't need to use Unity anymore. It was a pretty cut off your nose to spite your face type community, which is the developer community, which they're fine with actually getting away from the products if it is that they are trying to do damage or fight back against a company that they don't feel had their best interest in mind, which is exactly what they did, right? So like Godot skyrocketed in usership and Unity failed during this period. There was another major one. I forget the name of it. It's not Epic Games. It's what's the other one? Someone help me. Probably the biggest competitor to Unity. Anyway, as you can tell, I don't follow this company very much. But yeah, that was just a big mistake on their part. They changed their pricing model, and now they've tried to undo it, and the stock is doing whatever. But yeah. Oh, sorry, I was going to say there's a Stock Tank episode, not Activision. There's a Stock Tank episode of Tevis pitching me Unity. I wasn't that big of a fan even before the pricing model changes, just because it was pretty expensive and they didn't make any money. Will IWM rally harder in 2025? That's hard to say. I don't think I have any opinions on that yet. Not Take-Two. You guys are just naming big game developers with in-house solutions. I'm talking about platforms that actually sell their product. But that is one of the biggest problems with Unity, is that once a company gets large enough, they just get off, the platform. Like Take-Two or like Activision, they'll just build their own software in-house. It's cheaper. Where the products that I really like for software, Unreal Engine. Yes, Unreal. That's what I was talking about. Daniel, lifesaver. So what's it called? With products like Salesforce, like ServiceNow, like Palantir, Shopify, these are platforms that grow as you grow, and there's no cap to the top, right? Shopify is probably the one that people would be concerned that you would eventually grow out of. I promise you that's not going to be the case. Shopify will be servicing the largest companies in the world. But, I think that it's important to get into industries where it's not very easy for them to get off the platform once they get to a certain size. And whenever you guys look to Squarespace and Wix and all these other platforms that potentially offer cheaper solutions than Shopify, one of the biggest problems that they have is that the businesses that end up getting on those platforms literally grow away from them, which is the biggest problem, right? And if you have a company that is such a in amazing, like even Kelly runs some very successful businesses. If she was to run businesses on some of these other platforms during days like Black Friday, they just do not handle the amount of activity that actually goes to those websites. And so they find crashes. Shopify does not crash. Okay. So if you believe in commerce and you believe in, more money will be flowing through the internet next year than there was this year, at least on a trend basis. Obviously, there can be years like COVID or something like this where there could be black swan events that bring down the average. But overall, there should be more selling online and more people moving digital than there was the year prior. The percentage of cash purchases goes down every single year. Okay. And there's still a long way to go. So, yeah. Of course, I sold SoFi on Tuesday. Then it goes up. It's been going one direction, brother. But the truth is that it still might pan out for you anyway. There's been a lot of people that sold at $8 and they're watching what's happening and they're about to have missed out on a double from where they ended up selling it. Because literally, let's look back at what I've said for years and let's watch how well it works now. Technical analysis did really well for people whenever it was in those ranges. And I was consistent in saying, you don't know when those ranges are going to break. And there's all sorts of drawings on the charts. And I'm sure there's people that do great. Like Jesse Dow, whenever I say these types of things, it can sound like I'm anti-Jesse Dow. No, I'm not. I'm anti the 99% that can't do it like he does. Right? I'm anti the 99% that can't do it like income sharks. I don't question those guys. They have something in their brain that is better than mine. Okay. But whenever people were drawing all these charts saying, oh, well, I buy SoFi at 7, then I sell at 9, and I do this rinse and repeat. And they consistently hold these sort of things. And they go, even as it went up to 9, they said, see, I'm out now. Watch it go down. And then it went to 10, 11, 12, 13, 14, 15. Now they're posting about something else. But things can break out of channels. Okay? Buy companies based on fundamentals. That's the 100% success rate way of buying a company. The only way that I'm going to get it wrong is if I was wrong about the fundamentals. If I didn't understand the business well enough. Okay? If there was something going on underlying that I did not understand that was worse for the business than I had assumed. For SoFi, we got lucky. I understood the business. Now, Ram and all these people will say I still don't, and that the accounting stuff is a problem, but I don't think that's true. What is SoFi? $491 members. We literally need 9 more. 9 more. In the Discord for me to hit my goal for the week. 521 people watching here. I'm going to throw my chair, dude. That's all right. Not everyone wants to watch, or not everyone wants to read their due diligence. And also, Nala is promoting, so not a lurker anymore, which we call Nala, is promoting the Discord because he's actually a mod there and he's not a mod on the YouTube channel. So careful. He's got extra powers over there. You can't be talking all this crap over here where he has no powers and then you get over there and then you get kicked. What is the link to the Discord? I mean, here. Can I post a link in the chat? I know a lot of people cannot, but I can put it there and then I can also highlight it. You could go to that. I mean, that's pretty hard to type out maybe, but it is in the Discord of the video or in the description of the video. That is the Discord link officially. Don't hit other people's links. Go down in the description. It's the official one. what is on the Discord. Conversations about, SoFi or crypto or Robinhood or Nubank, or if you are an actual member of the YouTube channel, then there's additional areas for you to talk in and learn from other people. There's someone in the voice chat right now just chilling, which we did one of those, just chilling in the voice chat and having conversations with some of you guys. Maybe after this, I'll get out of this and join the voice chat. That's what I'm going to do. Right after this, I'm leaving this and going into the voice chat, so then you guys have an incentive to go over to the Discord. But yeah, it's just a place for us to talk and, share a little bit of DD. And what I really hope is that you guys also start dropping some links in there whenever you see it. That'd be great for all of us if we can kind of get a community of researchers to find other stocks that we like, that we can learn from each other and have a little bit of an investing community, which is something that I've been wanting to grow and waiting for YouTube to come out with some sort of solution, but I've just waited a year for this and they've not created anything. So they said they were going to and then never did. All right. All right. Thank you guys so much. I do appreciate it. Thank you for joining. But if there's any other questions on SoFi, I'd love to answer them. We'll round it out to about an hour or so, and then I can do anything on the spreadsheets, anything like that. We can talk about the Galileo deal, potential other Galileo deals that you guys want to hear about. I'm a big believer that SoFi's next largest one is going to be Citigroup. I'm a big believer in that. They even said that they were going over to Google Cloud to help with an AI project that they're working on. Citi is. And then a lot of people believe that because they were going over to Google Cloud, that this meant that they're not using, SoFi, or sorry, they're not using Technisys to help with their back end. Well, that's actually not true. Technisys actually runs on Google Cloud. So potentially it's even getting them closer to that ecosystem. Doug, a new member. Welcome, brother. Welcome, welcome. Thank you so much. Nubank in the UK. Philip, you are the best. Thank you so much. Nubank is potentially moving their offices, like their legal offices, to the UK out of Brazil. Very weird. Now, is this to sort of start building in the United Kingdom? Because that would be interesting if they started to offer their products there. But from right now, it doesn't seem like that's the case. They just seem to be moving their back-end offices or the actual back-end over to there. 10 or 503 members. Thank you, guys. Appreciate it. Signed up again. Thank you. Tanner, what do you think about SoFi's recent robo trading platform? I put a small amount of money into the Robo Roth IRA and it grew nearly 40%. So I have not been a super fan of RoboAdvisors because, in my opinion, the ones that I have looked at have underperformed the S&P 500. But a lot of people are telling me stories like this where they put in RoboAdvisors on aggressive and put it into the Robo on SoFi, and it's outperformed. So if it's outperforming the S&P 500, that's all I care about. And if there was a robo-advisor that outperformed the S&P, then you're getting all the benefits of the easy DCAs, the rebalancing, the, ease of use. With outperformance, that you can't beat that. The UK is a redeveloping country, so maybe they got a good deal. Yeah. No, I don't have a lot of details on the UK thing, but it is exciting how much more internationally they are expanding. Like you see Revolut and just the amount of different countries that they're getting into, the amount of clients that they end up signing up, there is a little bit of like, all right, well, is Nubank going to shoot their shot? Like this is their long-term goal. They want to take it slower, but you've expanded into, what was it? Mexico in 2019, I think it was. Colombia in 2021. So we're right about that time. Let's get into another geography, and I would have assumed that would be Argentina, but maybe they worry that there's competition already there, but I wouldn't assume that Mercado Pago would be that strong that they believe that they can't also win more deposits there. I mean, they're destroying Mercado Pago in Mexico already. 70% of new fintech deposits in all of Mexico go to Nubank. That's phenomenal. I knew you were in an aggressive portfolio. It's the only way you'd have that much. But that's fine. Like if you're trying to beat the S&P 5, like the S&P 500 has an aggressive portfolio. So aggressive doesn't mean that, everything you buy is Palantir, HIMS, and freaking Rocket Lab in terms of like high beta positions. That's not what that means. Aggressive portfolio really just means that you're buying equities rather than fixed income products. So if you have any form of fixed income, all right. So some guy is trying to correct me, saying it's Mercado Libre, not Mercado Pago. So if you know anything about the company, Mercado Pago is the fintech, what do you call it? Segment of their business. Mercado Libre is the online e-commerce store that people can go to. Mercado Pago, which is PAGO, is their fintech thing. So you stop putting in caps, you're wrong. Next. London is the hub for fintech. Well, that's interesting. Because obviously there is a lot of good fintechs that come out of there for sure, but that's interesting if it's that big of a deal for them to switch. So who's the new Galileo client? The United States Department of Treasury. That's who. In 6 months, I turn 18 and my parents can no longer control how much I invest. And every night you watch investing shows? That's a bright future, my friend. Keep doing your due diligence. You'll be a freaking Warren Buffett by in no time. I was going to say by the time you're my age, but Warren Buffett's been investing for quite a while. But that's insane unknown. Unknown's been here for some time. When City Client? No idea. Yeah, aggressive just means equities. It would be on the portfolio manager to dictate from that point. Bonds are for boomers. Okay, ladies and gentlemen, thank you all so much for watching. Really do appreciate it. This has been, no, not that. This has been an amazing journey so far. We're going to continue to build, I'll show off the different companies that I want to talk about and maybe try to build out away from just fintech. Because obviously my portfolio is a lot of tech and I do want to eventually get there. It just might be hard to talk about SoFi and Shopify in the same video, but I'm going to get you guys there. You're going to love all of me eventually. That being said, 1534 in overnight trading. What an amazing time. Hopefully everyone's enjoying their gains. Congratulations to the people breaking into the $100,000 marks, the $1 million marks, the $5 million marks. It's amazing. It's amazing. I'm glad what we've all stuck to and believed in because the business is growing and that's all investing is. We're just using our brains to frickin', bet on the future here. It's, to me, it seems easy, but I mean, it never is. And like, I don't want to say that, but like, to me, it seems like the digitalization of financial services is 100, like that's a 100% chance of happening. There's a 0% chance that doesn't happen. That's the way I think about that. Same with AI, same with more cloud computing, same with more semiconductors, same with more e-commerce, all of these things. If it's easier to use, it's faster to use, and somehow cheaper, it will never not happen. It's an easy way to do growth investing. You don't have to look back. There you go. All right. Thank you all so much for watching. Bye for now.